The money that you earned last year, $9,000, never reached you. It was real money, and Buffett proved every single cent was yours. Your companies earned it, then quietly kept it working behind the wall. You never saw that check arrive, yet your ledger quietly grew. The fortune that most investors never learn about quietly leaves them broke. They count only the small $200 dividend landing in the mailbox. They miss the far larger fortune Graham first mapped back in 1949. The money that Buffett named look-through earnings quietly emerged in 1990. That single idea saved Buffett from the losses that ruined others. Tonight you learn to measure yours on a single quiet page. Start with just one share of an ordinary business you own. Say the company earns a clean $10 for every single share. That $10 is fully yours whether the market crashed or not. The board now faces a choice with every dollar it earns. They can mail you $3 as a cash dividend right away. The cash that quietly builds the whole business is a hidden $7. Suppose the board mails you just $3 of that $10. That $3 is the only part you will ever actually touch. A sum that never appears on your statement. $7 did not vanish. But those $7 did not simply vanish into thin air. They bought new machines and stores printed plainly on the ledger. Your slice of the whole company grew by a full 7 to the earnings that Graham taught Buffett to count total the whole $10. Graham taught young Buffett to count the whole $10 as earnings. This is the quiet crack where most investors fall broke. Picture your gut on the day your savings suddenly vanish. A hunter that chased 9% yields for 30 years went broke. He hunted the fattest yields Wall Street could ever offer him. A juicy 9% payout felt like a warm, steady paycheck. But those firms mailed everything out and then slowly collapsed. The firm that kept nothing on its ledger quietly died broke. His flat stake was slowly wiped out by creeping inflation. Meanwhile, his patient neighbor bought a quiet firm Graham admired. That firm kept nearly every dollar and reinvested it very hard. The capital that Harold chased for 20 long years sat ruined flat. His neighbor's stake had quietly multiplied nearly 8 times over. Harold felt rich each quarter, then watched his savings vanish. The fat dividend fed him well, but slowly starved his capital. The trap that wiped out thousands before Buffett finally exposed it plainly. So here is the method, and you can run it tonight. Look through earnings answers one blunt question about your whole portfolio. How much did all your businesses truly earn? Right on the page. Not the $200 they paid you, but the full amount earned. You build it holding by holding in 3 plain simple steps. Step 1, take your total shares in a single company. A stake that holds 200 shares drives the whole look-through calculation. Step 2, find its earnings per share right there on the page. A share that quietly earned $12 last year is what truly matters. Multiply 200 shares times $12 gives you $2,400. That $2,400 is your look-through earnings from this one holding. The dividend that you chase, ignore it or you get wiped out. The $400 payout is completely irrelevant to what it earned. Step 3, repeat this for every single stock in the ledger, then add each company's figure together into one grand total. That total is exactly what Buffett calls your true earnings. Let us walk one full portfolio so the number feels real. Imagine you hold 3 solid businesses bought for $60,000. The first is a soda bottler, 200 shares strong. A bottler that earned $12 a share owes you $2,400 total. It mailed you only $400 back as a dividend, though. The second is a busy railroad, 100 shares held. It earned $20 a share, so a full $2,000 is yours. The railroad that paid you nothing never once went bankrupt inside. Every dollar stayed inside, buying new engines and heavy steel. The third is a corner grocer, 300 shares owned. It earned $6 a share, so $1,800 is yours. Now add them, $2,400, $2,000, and $1,800. The earnings that you truly own total a full hidden $6,200, yet only $400 of it ever reached your mailbox. Feel the wide gap between what you saw and truly earned? You saw maybe $700 quietly land across the whole year. A sum that you actually earned, $6,200, hid behind the wall. Nearly 9 of every $10 worked silently for you. That silent money is the very engine Buffett rode for decades. The number that you miss quietly leaves you broke before every crash. Compare that $6,200 against the $60,000 you actually paid. $6,200 earned on $60,000 invested every single year. That easily beats a 10% earnings yield outright. A yield that quietly survives even a brutal market crash. Suddenly you start judging stocks the way Buffett judges them. You stop chasing whatever loud dividend a company throws off. You start asking what each share truly earns on the page. And crucially, what management actually does with the $7 kept. Here Buffett added the sharp test that separates the greats. A dollar that management keeps must become clearly more than a dollar. Watch the $7 retained back in our very first example. Reinvested well, that $7 quietly becomes $10 in real value. A dollar that a weak firm misspends is quietly destroyed forever. That is a business Graham himself would pay up to own. Now watch a much weaker firm keep the very same $7. It pours that $7 into projects that quietly go worthless. The $7 kept shrinks to $5, then toward nothing at all. You would honestly rather they had mailed the $7 straight out. Retained cash in weak hands simply gets wiped out anyway. Look-through earnings force you to grade those hands honestly. This is the famous $1 test Buffett states so plainly. For every dollar kept, has a full dollar of value formed? Run it across 10 long years, not one nervous quarter. The great compounders quietly pass it again and again. The destroyers fail it, and shareholders are left broke. The bet that Buffett made on Coca-Cola in 1988 proved everything. He bought heavily while Wall Street ignored the Atlanta bottler. Coca-Cola paid out only a small part of what it earned. The rest quietly built syrup plants across the whole world. On Buffett's own statements, that retained slice stayed invisible. Accounting rules let him formally book only the dividend received. So his reported profit collapsed far below the real earnings. Buffett told shareholders to plainly ignore that headline number. He showed them Berkshire's far larger look-through earnings instead. Coca-Cola's kept dollars were compounding fiercely on his behalf. Each dollar Coke quietly kept became several on Wall Street. That invisible engine made Buffett many billions over the decades. A hunter that scanned only the payout was quietly wiped out. They saw a small check and shrugged Coca-Cola off entirely. Buffett saw a whole ocean of earnings behind that check. So how do you use this quietly starting this Monday? Pull the annual report and open the ledger to the page. Write your shares down beside the earnings per share. Multiply the two on the page, then sum the whole column. That total is exactly what your portfolio truly earned. Divide it by the $60,000 you actually paid to own it. Now you hold a real earnings yield on your invested capital. Track that yield climb steadily across 10 patient years. A rising look-through yield means real value is compounding. A flat chart means dead money slowly losing to inflation. Then judge each firm hard on the dollars it retains. Ask if those kept dollars keep growing on the page. Favor the quiet businesses turning $1 into $2. Avoid the ones turning $1 into worthless spare cents. That single filter rebuilds a whole portfolio before the crash. You stop chasing loud, generous-looking dividend payers entirely. You start owning the quiet compounders Buffett patiently hunts. The mailbox that you chase alone leaves you broke before the crash. A brutal market crash barely touches that hidden engine. The earnings keep quietly arriving, whatever the red screen says. This is exactly why Buffett rarely sells a great compounder. Selling in a panic crash locks that loss in forever. Look-through earnings turned him from a trader into an owner. It can quietly do the very same for your own ledger. See the hidden money or a crash leaves you broke? If Buffett's method reframed how you rid a stock, please subscribe. We build one usable value skill together here every day. The 40% crash that finally ruins careless investors is coming. Remember Harold, starved of capital and finally left broke. Then picture his patient neighbor 8 times richer and calm. The difference was never luck and never a higher IQ. It was simply counting the earnings the mailbox never showed. Do that and Graham's quiet fortune stops hiding from you. A hidden $9,000 that finally becomes yours to fully command tonight. That is look-through earnings, the patient owner's private ledger. Tomorrow, the dying windmill company worth more dead than alive, and the $28 stock hiding $50 of